Good morning, everyone. Happy Friday and happy October 1st. It is Julie here with your TipRanks pre-market morning update, where we're bringing you everything you need to know before the market opens. So let's get into it. All right, guys, welcome back and thank you all so much for being here. As usual, this morning we'll be covering exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Just before we get into all of that, this is your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, let's jump right into this morning's exciting stock market news. It looks like we are starting October off with U.S. stock futures slightly in the red after voting on the $1 trillion infrastructure package has been delayed. Currently, we have the Dow futures down 0.19%, S&P 500 futures down 0.14%, and NASDAQ futures down 0.04%. Chinese EV company NIO reported that they had record high monthly and quarterly vehicle deliveries for September. The company delivered 10,628 vehicles during the month, making a year-over-year jump of 125%. For the third quarter, the company delivered a total of 24,439 vehicles, which was up 100% year-over-year. At the end of September, the total number of vehicles delivered by the company stood at 142,000. Analysts rate the NIO stock a strong buy with an average upside of 79%. Also reporting on their vehicle deliveries was Chinese-based EV company XPEV, who also saw a record number of monthly deliveries. During the month of September, XPEV delivered 10,412 vehicles, marking a 199% year-over-year growth and 44% sequential growth. For the quarter, their deliveries stood at 25,666, which was up 48% quarter over quarter and 199% year over year. Their stock is also rated a strong buy with an average upside of 57%. Electric vehicle company Canoo has joined hands with AVL to develop, test, and validate advanced driver assistance systems for their lifestyle vehicle. The technology ensures the safety of occupants by giving vehicle feedback to drivers and reducing distractions. As per the terms of the deal, Canoo will hold the ownership of the software to ensure security, safety, compliance, and compatibility across vehicles, beginning with their lifestyle vehicle. The company said that the production of Canoo's lifestyle vehicle would begin in late 2022 and have Level 2 ADAS functionality at launch. The Canoo stock is currently rated a hold with an average upside of 49%. General Motors plans to run its plants here in the U.S. on renewable energy by 2025, 5 years ahead of their original target. General Motors is working in collaboration with energy firm TimberRock and power grid operator PJM Interconnection to track carbon emissions at its U.S. sites. Eventually, they plan to track carbon emissions from their electric vehicles they sell as well. In June, the company said it was planning to spend $35 billion on electric and self-driving vehicles through 2025, which was up from the $27 billion planned earlier. Analysts rate the GM stock a strong buy with an average upside of 36%. Pharmaceutical company Merck has announced that they've entered into a definitive agreement to acquire biopharmaceutical company Acceleron Pharma in a deal worth $11.5 billion. Merck will carry out this acquisition through a subsidiary and will pay $180 per share in cash. With products like Sotatercept and Reblozyl in its portfolio, Acceleron's acquisition is likely to enhance Merck's offering, especially in the Canadian, Australian, and European markets. The Merck stock is currently rated a moderate buy with an average upside of 20%. Intelligent cloud contact center provider FIVN and Zoom Video Communications have mutually agreed to cancel their merger agreement after the deal failed to receive approval from FIVN shareholders. Based out of California, FIVN provides digital engagement, analytics, workflow automation, workforce optimization, and practical AI to enhance customer experience. Zoom and FIVN will continue their partnership, which has been in place before the merger announcement. The partnership includes support for integrations between their respective unified communications as a service and contact center as a service solutions and joint go-to-market efforts. The FIVN stock is rated a moderate buy with an average upside of 26%. And the Zoom stock is also rated a moderate buy with an average upside of 41%. Now moving over to some notable earnings reports. Both the pre-market and aftermarket are fairly quiet for earnings today, but yesterday we did hear from Bed Bath & Beyond, whose stock has crashed 22% after they delivered disappointing second quarter results. The company reported adjusted earnings of 4 cents per share, which was down 92% year over year and significantly lower than analyst estimates of 52 cents per share. To add to that, their net sales declined 26% year over year to $1.99 billion and also failed to meet the estimates of $2.06 billion. Analysts rate the stock a hold with an average upside of 68%, but we are still waiting for multiple to reiterate price targets following the report. We also heard from PAYX, who came in with better than expected results for their first quarter and saw double-digit growth in both revenue and earnings. The company reported adjusted earnings of 89 cents per share, which was up 41% year over year and came in well ahead of analyst estimates of 80 cents per share. To add to that, their revenue grew 16% year over year to $1.08 billion, surpassing the street's estimates of $1.04 billion. Analysts do currently rate the stock a moderate sell with an average upside of just 1.3%. And we also heard from CarMax, who came in with mixed second quarter results where they had their earnings miss but revenues beat. The company reported earnings of $1.72 per share, which was down 3.9% year over year and missed analyst estimates of $1.90. On a positive note, their net revenue climbed over 48% year over year to $7.99 billion and significantly outpaced the street's estimates of $6.9 billion. Their stock is rated a strong buy with an average upside of over 32%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Atea Pharmaceuticals. Under the ticker AVIR, they're currently up over 31%, followed by SunPower under SPWR up 9.6%, and Marathon Digital Holdings under MARA up 8.3%. Our biggest losers this morning are led by OI Glass. Trading under the ticker OI, their stock is currently down over 15%. Followed by Verb Biotechnology under VIR, they're down 11%, and Adagio Therapeutics under ADGI, down over 10%. So that'll be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. I hope you have a fantastic weekend, and I will see you back here next time.